after the great run in the gold price from below 1,500 in March to 2,075 in August, the market's gone a little bit flat. We're trading a couple of $100 below those all-time highs. So actually, is the best of the move well behind gold and now is the time to sell out? Or actually, is this just another buying opportunity before another look at those all-time highs? We're going to take a bit of a different tack in this video and talk about legendary hedge fund manager Ray Dalio and his thoughts on the market and where the threats could be. And then we'll talk about gold normally. Before we get into all of that, let's just see what's been going on recently. We had that great run up, of course, to those all-time highs, but the price has been really flat since that sharp sell-off. Let's take a look at the shorter term. So this is what the market looks like over the last 6 weeks or so since those all-time highs. And we are nudging back down to that low from the middle of August around about 1860. Really big level to watch. And there's a big threat for gold, I think, in the months ahead. Our gold trades are under some pressure. So currently running a loss of about £170 on gold. So given the sell-off we're seeing in this market, is now the time to actually dump the positions because sentiment has changed and gold's going to sell off much harder, or actually it's just another correction? Hello, I'm David Jones from Capital.com, and I thought we'd take a look at what someone else thought about gold for a change. So I thought we'd do a gold update, but with a slightly different twist, and talk a bit about legendary hedge fund manager Ray Dalio. So as usual in this video, I'll talk a bit about him, his views on gold. We'll talk about what's been driving the market, what to look out for. Then we'll jump back onto the platform, look at things in more detail from a technical point of view, and see if there's a trade to do. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it helps support the channel and means we can continue to push out about 4 videos every week on the different markets we cover. Plus, of course, we've started doing live streams quite regularly now. The next one will be the first Friday in October, covering the payrolls. If you're subscribed and you have the alarm bell thing pushed, you get notified whenever we go live. Anyway, let's get into talking about Ray Dalio and gold. So who is Ray Dalio? Well, he's a legendary hedge fund manager, a multi-billionaire hedge fund manager, I should say, founded his firm, Bridgewater Associates, back in 1975. In 2013, Bridgewater had become the largest hedge fund in the world. And as of this year, according to Bloomberg, Mr. Dalio was the 79th richest person in the world. So someone who does appear to have done okay out of financial markets over the years. He did step back from the day-to-day running of the hedge fund in 2017. And actually, it's not been the best of years for Bridgewater. As of August of this year, its sort of flagship Pure Alpha 2 fund is down just over 18% for the year to date into August, with plenty saying that they were somewhat late to react to the market sell-off in March, which I think is understandable because it happened so quickly, but then a bit late to get back in as the markets around the world recovered. So it has definitely underperformed versus its peers. Gold, though, should have been a good market for Bridgewater in the second quarter. The company put in something like $400 million into gold via ETFs, those exchange-traded funds we've talked about before in the second quarter of the year. And of course, we saw that incredible run-up by gold that started in mid-July, even though the market has been somewhat flat over the last month. More recently, Mr. Dalio says that he thinks that the US dollar is really under threat as the world's reserve currency due to the ongoing stimulus provided by the central bank, the Federal Reserve. We've seen, of course, plenty of stimulus, plenty of help from central banks since the spread of the coronavirus pandemic. So far, at least, the US dollar in recent trading is sort of defying this call for its demise. It has taken a big hit since March, but we are seeing some strength come back in. Let's talk about what's been going on with gold. So as we all know, I think if we follow gold, we hit all-time highs in August, trading up to about $2,075 an ounce. We have seen quite a sharp reversal of that fairly soon afterwards. And at the time of recording, gold is trading pretty much where it was a month ago. There was a lot of interest in gold in the second quarter. I talked about Bridgewater putting money in via ETFs, exchange traded funds. These ETFs saw a record influx in the second quarter of 2020 with both retail, private investors and institutions buying ETFs to gain exposure to gold. And then, of course, we saw that fantastic run up. But I do think for gold, I think the biggest threat over the next few months is a recovery in the US dollar. We've talked about this dollar index a little over the last few weeks. We'll take a look at it when we jump back onto the platform. The dollar has taken a battering since March, but I think if you look at the price action more recently, it's perhaps not doing what it should be doing. You know, we're seeing more support from the Fed, commitment to pretty much near zero interest rates for the next 2 or 3 years. But we are seeing the dollar perhaps building a base. I think if we see further US dollar strength from here, that's something that could really put the squeeze on gold. So the question is this dollar comeback about to wrong for investors, or are we going to see more holes appearing in the global economy, which will lead people perhaps to look at gold as a safe haven? Let's talk about the levels to watch, then we'll go back onto the platform and see if there's a trade. The obvious big level to pick out, those all-time highs from August, $2,075 an ounce. After that, we've got some more levels on the way down, with the most recent coming in, the most recent barrier on the upside around about $1,975. On the downside, I think 1860 is a big level for short to medium term traders. This is the level we hit in the sharp sell-off from those all-time highs and saw support come in. Is it going to be the same this time around? Let's take a look on the charts. If we take a look at the really long term in gold, our favorite chart going back to 2018, that trend is still going. We had the sell-off in March, came back towards the trend line. The market accelerated since then. That trend is coming in around $1,500 an ounce, slightly below there. So the 2-year plus trend is still chugging along. But has it really got a bit ahead of itself? Let's focus on the move since March. So there's the March move, the trend off those lows from around 1450, that sort of area. And we have fallen out of that trend really by virtue of the fact the price of gold has been trading sideways. So we've slipped out of that trend. And for me, 1850, 1860 is the really big level to watch. If we fall below there, I think the risk is for a deeper sell-off. I think anybody who got into the move late on saw it sell off sharply after the all-time highs. I think if the market starts pushing below 1850, the risk is for a deeper sell-off. You know, looking at the July levels from 1750 to 1800. But for now, I'm quite happy to stick with the existing positions in gold and the stops. But like I said, it's the dollar is the thing to watch. So let's take a quick look at the dollar index. So here's our dollar index. I've talked about this a bit in recent weeks, and it's a really interesting market. It's the dollar against this basket of different currencies. And we saw the dollar perform really well in March when everyone had a risk-off approach, less risky assets, like the US dollar was seen as a safe haven. But then investors came back and embraced risk over the last 6 months. And that's meant the dollar index fell from 104 down to 92. So we saw an 11% fall pretty much in the value of the US dollar. But what's been interesting is what's been going on over the last couple of months. So we had this low for the dollar index in July. It tries to push lower in August, but there's no follow through. Tries to push lower again in September, but again, we don't get the follow through. And I said that actually, is this the market discounting all the negative news for the US dollar, the commitment to zero interest rates, the possibility of more Fed intervention? And could we see a US dollar recovery from here? At the time of recording, the dollar's trading in its best levels since the end of July. And it looks to have broken out of that downtrend. So I do think the dollar index, for all sorts of reasons, is an interesting market to watch from here. And I think we could expect further dollar strength. So I think that is going to put a bit of a squeeze on the value of gold. But for now, I'm happy to stick with the position. Because of the sell-off that we've seen, the RSI down here has gone oversold. It's the first time we've seen an oversold RSI. We need to go back to March of this year for the price of gold to see the RSI this extreme. And tying it in with the old support, I suppose if you were really aggressive down here with the price trading around about 1884 at the time of recording, you could be a buyer with stops the other side of perhaps 1850, looking for a squeeze back up to those early September highs in the sort of 1965 area, that sort of place. So it wouldn't surprise me in the short term if we did see a bit of strength, come back into gold. But I think for the next few months, towards the end of the year, keep an eye on the dollar index. I think if we do see some dollar index strength there, we could see the price of gold under pressure. But for me in the short term, it's all about this 1850, 1860 level. So I'm happy to stick with our long positions for now in the price of gold. I've got stops in at 1820 and just below 1800. So we'll see if that level does hold over the next couple of weeks. If we do see it broken, I think we could see a pullback towards 1800. Then we'll look at it afresh from there. That's it for our latest gold update. We'll see how it pans out over the next few weeks. But from me, David Jones and Capital.com, good luck with your trading. For more trading videos just like this, please subscribe to our channel.